The thing is, Danielle, there's a disconnect between what the market thinks about inflation and what the Fed thinks about inflation. What's causing this? I mean, hasn't the Fed been clear?
Well, the Fed has been very clear. I don't know that the Fed is necessarily prepared for what it's asking for. If you look at the gap between where the core PCE, where the Fed's favorite inflation metric has been for the past few years, it is so far off of trend that for the Fed to satisfy its new mandate of average inflation targeting, saying we're going to let inflation run hot as long as we can bring it back up to trend, that could take years. And I do not think that the Fed policymakers are prepared for what the bond vigilantes will do if you see truly a sustained rise in inflation that does start to bleed through. We're seeing it in record high auto prices, record high home prices here in the United States. It is feeding through to the consumer, and the container situation that I was describing earlier is actually its own source of food inflation, and that's the most difficult kind of inflation for households to shoulder, of course.
Front end close to zero, longer term surging, prompting some to say that perhaps it is time for the Fed to do the twist, Operation Twist, that is. Your thoughts on that?
Well, it does seem to make sense, and there is enough steepness in the yield curve to draw a parallel between the last time that the Fed launched Operation Twist, when I was still on the inside, and where we are today. There's tremendous pressure at the short end of the yield curve. Banks are running up against limits. They don't want to take any more deposits in, and at the same time, you're going to have money market funds here in the United States that are starving for collateral while all of this liquidity is flooding into the system. The Fed does have a tool that can address this, but they could also, as you say, twist the curve. They could sell short end and buy at the long end. But I will say, with Lael Brainerd on the headlines, as much as she's been in the past few days, her idea of yield curve control has always been the next step for the Fed to take, and that only goes out to the 2-year. So we're talking about a complete right turn, a complete 90-degree turn in terms of Fed discourse, what they're going to be talking about at this March 16th meeting in Washington, D.C., for them to flip to a twist narrative. We do have 3 more days before Fed blackout, before this next FOMC, and of course Powell's on tap this Thursday.
Daniel, how much of the price action was dictated to by market structures? For instance, bond traders have been saying for years that liquidity is there in, of course, the world's biggest bond market, except when you really need it. And we perhaps saw a lack of liquidity, which led to what happened. And could this be repeated? And this is a stark reminder of what happens overall should the Fed dial back.
It is. We've definitely seen a seizing up in the bond market when the Fed attempted quantitative easing, when the Fed attempted to shrink the size of its balance sheet, normalize the Fed funds rate. We also, by the way, as you're likely aware, we also saw a complete seizure at the long end of the curve, the long bond in overnight Asian trading before the Fed came in with their massive bailout package last March. There were actually times in the middle of the night in Asian trading that you could not trade the long bond. Extraordinary activities, extraordinary events in this $21 trillion market that is supposed to be the deepest and most liquid on planet Earth. And again, we got a huge reminder of that last week. Pay very close attention to the MOVE Move Index that you can follow on the terminal. I follow it the most closely because bond volatility becoming unhinged is typically followed by these liquidity deserts that make for such volatile trading in the bond market.
Danielle, bubble, toil and trouble. We heard from a China's bank regulator warning about a bubble in overseas markets, the likes of the U.S. Your thoughts on that?
Well, we're certainly seeing how interconnected different risky asset markets are. And there is something to be said, given the fact that we have seen technology stocks underperform the broader indices for 6 months now. We are seeing momentum dissipate as well, such that you might start to say, well, this is more than just a rotation trade. There might be fear seeping into the market, given that valuations are in the 99th percentile, historically speaking. So at some point, you have to think that markets will try and correct. But again, this is going to be butting up against the will of Fed policymakers who are trying to allow inflation to run hot. They're trying, in a way, if you think about World War II and fighting a war on two fronts, that's what the Fed is doing right now in trying to control the narrative on one end as well as on the other, while there is so much disruption going on and signs that these bubbles are starting to erupt, not just in the United States, but around the world.
You were not a fan of Bitcoin. You had called it a nothing burger, a garbage investment. So I called Nancy, your director of public relations, and I said, is this fake news? And she said, no, it's true. So I was like, I need to get Kevin on and know, why the change of heart?
So when facts change, I change. And the reason that I had never participated in crypto was that I'm in a highly regulated business. I have many investments, including my chairmanship of O shares. As you know, we issue under securities laws, and so many other investments I have in fintech. And I don't play in places where the regulator hasn't decided what they're going to do. And what changed my mind, and I was very specific on it, was I'm in the ETF business. And when I saw that the Canadian regulator and the Swiss regulator and many other regulators, that this has happened just in the last 60 days, have opened up to allow a ETF that holds one asset, Bitcoin. Now that's a game changer. There's no question about it. That allows institutions and individuals alike to allocate. And that's number one on the hit parade that really moved me, because I have actually owned crypto since 2017. Ethereum and Bitcoin, but not really been able to speak about it because regulators really frowned on it. And as you're well aware, this is a very controversial issue. Then, of course, in the last 30 days, we've started to see S&P 500 companies, including Tesla and others, start to allocate onto their FX tables. Let me explain what that means. I own an allocation of other currencies. So US, Canadian, Swiss franc, euro, British pound. And I do that for a reason. I want diversity in the actual fiat currency I own. And also at any one time, one currency is doing better vis-a-vis the other. The concern I have right now in the US market is a $1.9 trillion, basically free money helicoptered out of the sky into the economy. Many people are worried about that. You've seen the 10-year go from basically 90 basis points to 1.4 in a very short period of time. How do I hedge myself against that? Now, I can obviously move into more Swiss franc, which has been a rock star stable currency. But at the same time, if the regulator is now opening up to allow me to allocate to crypto, why not? And that's why I did it. And so, look, I have taken it's been very interesting 2 days. Many interviews like this. But as I say, I'm a pragmatic investor. I think a 3% allocation for me is reasonable. And then a whole host of questions have to be answered in terms of how do I do that?
And I applaud you, Kevin, because it's not easy to come out after, not liking an asset for a very long time and say, hey, look, now I'm open and receptive to it and things have changed. In the past, you liked gold as a hedge against inflation. Has that changed for you now?
I still own a 5% weighting in gold, 2.5% of it physical gold where I pay for storage, and the rest I use ETFs like I'm going to do with Bitcoin to balance my holding to the 5% weighting quarter to quarter. But now I have that option to do the exact same thing with Bitcoin. And so you're starting to see the stars align on Bitcoin as an institutional asset.
And talking to people that CEOs that run crypto apps and various industry leaders, and they are concerned about Gary Gensler as he takes over at the Securities and Exchange Commission. Also, some comments made about from Janet Yellen, the Treasury Secretary, about crypto and Bitcoin being inherently worthless. I mean, they don't believe this to be the case. They think they're on the cutting edge of something big. And here's what we understand. If you listen to Gary Gensler today, Liz, it was interesting. He spoke about a lot of issues, but he did mention that crypto is going to be on his radar screen for scrutiny. Should point out that he did a lot of research about this while he was at MIT before he's taken over as SEC chair, which he needs to be confirmed, but it looks like he will be. So what we're understanding is that a bunch of industry leaders are trying to get together, and they're discussing whether to go together as a consortium as maybe create their own trade group to basically go to the Biden administration and say, whoa, if you're thinking of regulating us, not so fast. Here's the good part of the industry. Here's what the industry is doing. Here's why Elon Musk is allowing people to buy Teslas with Bitcoin. This is a real business. It's a real thing. It has real long-term value. And you guys, if you're thinking of regulating us, just take a deep breath and give us our side of the story. We don't know if this thing has been formed already or whether it's about to be formed. We do know there's a lot of chatter. And I think if it does happen, and I think there's a likelihood it will. I can't report everything I know just yet because some of this was told to us in confidence. Some of it is still developing. It'll be major players. I mean, I would suspect you would see guys like Novogratz, right, and the big investor who's into crypto. Someone like people of his stature going and starting to be industry leaders here. We should point out that the crypto business, just by its very nature, is very disjointed. Like the banking business has a lobby group. I don't think there's a crypto lobby group just yet. Excuse me, Liz, but there will be one, and this is the first steps towards that. And again, it comes as you heard Gensler today talk about crypto being, among the top things he's going to look at, including Robinhood.
We talk about Bitcoin virtually every day these days. It will have an implication on your tax proposal, perhaps, again, given the volatility of it. There are people like Janet Yellen who are warning that this is both speculative in nature and is going to potentially end badly. Do you have a view?
Yeah, I think that Janet's a really smart woman.
That's all you're going to say about Bitcoin.
Well, speculative in nature and going to end badly. I don't think Janet left a lot of room for ambiguity there.
If you think America's politics are polarizing, consider Bitcoin. The price of a single Bitcoin today is nearly $50,000. 10 years ago, in its infancy, it was around $1. The digital currency's meteoric rise has minted millionaires. It has energized true believers around the world, which has only convinced skeptics that Bitcoin is the mother of all bubbles. NPR's Uri Berliner weighs in.
Nikki Bassetti was an engineering student at Purdue University, facing money pressure and teaching a bit on the side.
And I was getting paid about, I think, like $10 an hour. And it was just enough money for me to buy food and coffee and just ramen.
This was back in 2017, and being an engineering major, she was curious about Bitcoin, about its technology, its innovative design, and maybe, just maybe, as an investment. So she did a lot of research and spent $2,000 on a single Bitcoin. And then
I sold at the end of the year when it was about $19,000. I got an email from my bursar's office telling me this is how much you owe for the next semester.
That single Bitcoin she bought covered her tuition, books, and lab fees. And in a way, it changed her life. She's still buying Bitcoin, still excited by its promise.
I think sometimes when you're young, a new technology can really excite you and it can really shape your future and the way you look at the world. And I think that was the case for me in Bitcoin. It's definitely made me more optimistic. It's definitely given me like a lot of things to look forward to, especially in a time when things can seem so lonely and dreary.
There's a phrase for people who are all in on Bitcoin, not just to get rich, but as a force for good. They're called Bitcoin maximalists. George McHale is one of them.
I found something that I believe in. I found something that seems like it has a benevolent mission to sort of help humanity. And so I stuck around.
McHale is a mortgage professional in his day job and the co-author of a book called Thank God for Bitcoin on the moral case for the cryptocurrency. He started buying Bitcoin in 2017 and has continued buying and holding ever since.
It's not like we're not becoming astronomically wealthy yet, but if this thing does what we think it's going to do, we will be, and that will be a part of it. But I think it's important to note that that's not the motivation. That's a byproduct of being here.
Here's the maximalist case for Bitcoin. The cryptocurrency is beyond politics at a time when many people mistrust government. It's not controlled by central banks or leaders craving popular approval. McHale calls Bitcoin money for the people.
There's no CEO, there's no headquarters, so that's unique.
Bitcoin is borderless. Bitcoin can't be counterfeited. And here's what might be the biggest argument of all on behalf of Bitcoin. The way it's designed, only 21 million Bitcoins will ever exist. So it's like gold, finite, and a hedge against inflation. In contrast, governments can print endless amounts of money. So the argument goes, scarcity will keep Bitcoin valuable. There's only so much of it. That's the all-in maximalist case. Here's the more expedient one.
Bitcoin rising this morning following news that Tesla has bought about $1.5 billion in the cryptocurrency.
Massachusetts Mutual Life Insurance buying $100 million worth of Bitcoin.
Let's talk rocket ships. First, Bitcoin. That falls into that category because that's what that is.
Companies have been snapping up Bitcoin recently. So are ordinary people on apps like Robinhood, often buying a fraction of a Bitcoin at a time, all sending the price skyrocketing even higher.
Check this out. Bitcoin, it broke through the $50,000 level just a short time ago. It's now up more than 70% since January 1st.
It's fallen a bit since then, but the phrase you hear about Bitcoin this year is FOMO. Given all this buzz, it's probably a good time to ask, what is Bitcoin?
It is essentially a currency that's based on nothing except mathematics.
James Ledbetter is the publisher of Fin, a financial technology newsletter.
It doesn't correspond to anything that exists in the real world.
But it does exist in the digital world. Each transaction is kept on a ledger. And who's keeping tabs on those transactions? They're called Bitcoin miners, digital miners. Anyone can be one. What they do is make sure that everything on the ledger is legitimate.
It's verifying the transactions so that everybody can have faith that the system is clean and transparent.
The system does have its drawbacks. Verifying those transactions takes a lot of computer power and uses a lot of energy. Cyber criminals have stolen Bitcoin and other cryptocurrencies from exchanges where they're traded. And Bitcoin doesn't always go up. Its price has crashed several times before. So is Bitcoin an innovation that will improve the world, as true believers contend? Is it something more modest, a savvy financial hedge? Or is it a mirage?
The asset itself is creating nothing.
That's the legendary investor Warren Buffett on CNBC. He says Bitcoin doesn't lead to anything productive. He's even called it rat poison. A number of Nobel Prize-winning economists have warned against Bitcoin, saying it's a speculative bubble. One of them, Oliver Hart, wrote me in an email, like many economists, I don't understand why its price isn't zero. Bitcoin isn't used that much for actual buying and selling. It can be cumbersome. There are fees. Many economists say it's just way too volatile to be used as everyday currency. And they say Bitcoin is a solution for a problem that doesn't really exist.
We already have money.
That's Robert Schiller of Yale University.
What's special about Bitcoin? Well, it's special in our imagination.
Schiller says Bitcoin is certainly fascinating.
I have to say it's a great story. Secret codes, computers that write codes that can't be broken. So there's a narrative about this particular invention that sounds like it belongs in a movie.
Schiller is a Nobel Prize-winning economist known for his work on bubbles. And he says bubbles ride on a crest of enthusiasm. And there's plenty of enthusiasm about Bitcoin. One place he sees it is in his classroom at Yale.
I teach a course, financial markets, and sometimes they seem to be falling asleep. I just bring up Bitcoin and they suddenly perk up.
Remember Nikki Bassetti, the former Purdue student who paid off her semester's tuition with Bitcoin? She thinks the enthusiasm is justified, that Bitcoin and its technology will have uses that are hard to imagine today.
When the internet was just starting out 20 years ago, a lot of people didn't think that the internet was going to become the next big thing. They didn't see a value in it. They didn't see the point in sharing all this information to everybody in the world.
The next internet, digital fool's gold, or something else? The story of Bitcoin is evolving. So for now, it can be whatever you believe it to be.